Which markets do you prefer to trade then? Is it just equity?
Yes, I only trade equities. I don't mess around with foreign currencies. I don't know anyone who makes money trading foreign currencies. And the spread betting firms that encourage private individuals to start punting on foreign currency movements, I find bizarre and extraordinary that people from all walks of life think that they can suddenly make a side living punting the Japanese yen against the dollar or something. Seems absurd, but people do it, and I would think 99% of people lose money doing it, and those that don't are lucky.
What mediums are you using to trade?
I use spread betting, daily funded bets, contracts for difference, and just normal stock borrowing mechanisms where, in order to short a share, you have to obviously have a stock to deliver, so you therefore have to borrow shares, which precludes shorting some shares that you may want to if you can't borrow the shares. And unfortunately, a lot of smaller companies of the types that one really would like to short, for instance, on the AIM market, it is impossible to. It didn't used to be, but it is now, to short the shares because you cannot borrow the stock. In the old days, you could do what's called naked shorting, which is selling shares that you haven't borrowed for an extended settlement date, and just simply not delivering the shares. That is no longer possible to do that, which is fair enough. And so, in order to short a security, you have to borrow it nowadays.
And you talk about sort of holding and knowing when to let go. How long do you generally hold on to a trade?
Well, it depends. Again, if you want to open a short position, you generally would need to have a time frame of an action that is going to happen. A company may be in a restructuring talk. It's just to think this company is overvalued, I think you need a bit more than that being short, because when companies get overvalued, i.e. silly prices, they can get even sillier, and it's very difficult to call the top. My preferred way of shorting is when there is an event which is in the public knowledge going to happen. For instance, quite a lot of companies that may have already fallen by 95%, will have a restructuring in process where they tell you via a regulatory news announcement that their shares are worthless, or little to no value is normally the sentence used time after time. It happened with all the retail stocks in the last few years, Game Group, HMV, Woolworths, pretty much all the high street that's gone bust in the last 2 or 3 years. They have always come out and said, we're in talks with our bankers, lenders, XYZ, and any restructuring we do will render our shares little to no value. Now that to me is always a very good entry point, because you've got a time frame, i.e. we've got till the end of the month to come up with a restructuring process. We've got till 6-week period, and then you know where you are. So you're taking a bet they will enter administration, or the share price will decline substantially, even if it's declined already by 90%, by a certain time. So you then have in the back of your mind, you think, right, in 6 weeks' time, if I'm wrong on this, I'm wrong, and if I'm right, I'm right. And I can tell you that when a company's management tells you that their shares are worth nothing, you better believe them, because in practically all instances, it is worth nothing.